Morning everyone, welcome to Ainsley News. As it continues to rain in southeast Queensland, hope you're all tucked away in your offices or at home, having a great time. Crypto, Tuesday, as always, Bitcoin, the final dip. The market continues to draw down this week, despite short and long-term investors holding more profitable supply than the recent correction in September. Bitcoin traded low this week alongside weakness across many traditional assets, largely due to renewed concerns over a new virus variant. Bitcoin's price opened at a high of 59,000 US dollars and reached the lowest price of the month of 53,000 US dollars. This continues the price correction that has been in play for the most of November. With Bitcoin now over 20% below the all-time high, headlines in traditional media have declared that Bitcoin has entered a bear market. However, it may surprise some readers that this current market correction is the least severe in 2021. Some might even say business as usual for a Bitcoin holder. Sell-offs in January, February and April all reached drawdowns as deep as 24% from the all-time high before reverting. The deepest drawdown this year was the period from May to July, where the market reached a negative 54% drawdown at the lows. The most recent correction in September was the second deepest, reaching 37% from April's all-time high and 25% off the local high of $53,000. It's also important to pay attention to the state of Bitcoin derivatives markets, as they can often be a source of excessive leverage, which can unwind in a fairly spectacular way from time to time. In options markets, we continue to see between 12 billion and 14 billion in nominal open interest throughout October and November. The total open interest has come off the highs this week, down to approximately $10 billion following the expiry of the 26th of the November contracts. Futures open interest is also just below all-time highs when denominated in BTC, reaching just above 400,000 BTC in total nominal value. Denominating in BTC is used to remove the influence of coin price on this metric, such as coin margin contracts, and aid in identifying periods of rapidly growing leverage or deleveraging. Highlighted in the charts that we're going to show you today, several short and long squeezes where open interest rapidly decreased as price volatility forced traders to cover their positions. With leverage in futures markets near an all-time high, there is a risk that leverage may unwind, as has been demonstrated in almost all prior instances when open interest surpasses 350,000 BTC in size. However, for all futures positions, buyers are matched equally with sellers, meaning there is limited information on likely market direction in the event of a leverage squeeze. Perpetual futures funding rates can give us some insight into the market's directional bias, and at the time of writing remains slightly positive, so bullish. However, it is notable that funding rates have generally declined alongside falling prices, suggesting traders are more cautious as the correction proceeds. Whilst funding is positive, the decline is quite significant, which doesn't rule out the possibility that a large portion of the market is net short as price declines. It is reasonably plausible for a leverage squeeze to play out in either direction given this observation. Short-term holders are those whose coins are younger than 155 days. The realized price of the short-term holder cohort has been hovering at around 50,000 US dollars and would likely provide market support. This week, price traded to a low of 53,500 US dollars, suggesting a potential front-running of that psychological cost basis support level was in play. This is now the second retest of the STH realized price in the current trend, and if held, has similarities to major corrections observed in 2017, where it acted as a reliable support. A common on-chain behavior we see near the lows of bull market corrections are top players or buyers capitulating and realizing losses. In many ways, bottoms cannot be hammered out until these potential sellers are exhausted. Looking at overall realized profits and losses, we can see two recent events in play. Realized profits, in green, have declined alongside the correction, potentially signaling reduced profit taking and growing investor conviction. Realized losses spiked to $800 million per day, similar to significant sell-offs in April and July, but much lower than the major sell-off in May. This suggests a reasonable flush out of spot top buyers has occurred, but does not rule out further selling. Zooming into the STH cohort specifically, the STH profit-loss ratio has fallen just below 1 this week. This indicates that spending by STH or short-term holders are realizing losses on net. Similar to the STH realized price, this represents a test of investor conviction as prices return to or below their on-chain cost basis. Ideally, market strength needs to step in reasonably soon, else the probability of STHs selling at or around their cost basis will likely increase. The pseudonymous Bitcoin analyst and the creator of the Bitcoin price model called Stock to Flow, Plan B, called the last 3 months of Bitcoin prices correctly, but the analyst's worst case scenario forecast missed the mark in November. Despite the recent Bitcoin price drop, Plan B still seems confident Bitcoin's price is on track towards $100,000. It started 4 months ago when Plan B tweeted about his worst case scenario for 2021 forecast in June. Plan B stated that he believed BTC prices would be in August 47k, September 43k, October 63k, November 98k, December 135k in the worst case scenario. So far, 3 out of 4 of his monthly price predictions have come to fruition, and Plan B was also correct when he said 64k was not the top. The miss this month was the first time Plan B's prediction have been off so far, as the call for November had a 98k target. Plan B acknowledged that his prediction missed this month as Bitcoin prices slid under the 60k zone following the recent 69k all-time high. Floor model 98k November close will probably be a first miss after nailing August, September, October. S to F model not affected and indeed on track towards 100k. Plan B stressed to his 1.5 million followers on November the 25th. Nice to see people acknowledging when they make mistakes. We're all human, although most of that is from computation, of course. Well, if you're interested in buying any of our crypto today, jump over to anzwealth.com.au. It is a bit rainy, but you can still visit us in store in Brizzy. Over-the-counter sales. You can also buy online and we'll send it straight to your wallet. We've also got sales available at our Melbourne office, so you can walk in and buy there too. Interested in physical stuff, jump over to ainsleyBullion.com.au. That's gold, silver and platinum, and goldsilverstandard.com. Our own crypto built and backed by real gold and silver. Enjoy your day, everyone. We'll catch you tomorrow for Wednesday news.